Hello. Hello.
Hi, Dimitri. I can hear you.
Hi, Ben.
Hey, just to let you know, this is about investments. It has nothing to do with Clivity West. So
I understand. I know
okay,
it.
just want to let you know. Just want to let you know.
No,
Okay.
I know. I know.
Okay, sounds good. Make sure you mute yourself, Dimitri. I'm not going to take. This is going to be a presentation, and then we'll go ahead and take questions after, though.
Okay, I mute
Thank
him.
you. Thank you. Everyone, we'll get started in about 2 minutes. We'll give a little bit longer. It's 10:58. We said we start 11. We'll probably start at about 11:02. This presentation, I'm guessing, is not much more longer than, gosh, I would be shocked if it's more than 6 or 7 minutes. It's just we are going to start doing Zoom presentations in November, December, and January. We do dinner seminars throughout the year. We do a lot of client dinners throughout the year, but now that we're heading into the holidays, people tend to not want to go out and deal with it. So we're going to share our screen here in a second. Let's hold on here. There we go. I'm going to share it in 1 sec. Let's see here. Okay. So everyone should see that here, and then we'll get going in about 1 minute. Okay, everybody, we'll go ahead and get started. Welcome to our presentation. It's about alternative investments. Some of you have been to dinner seminars recently, so you know what's going on with this. We did a little bit at some of the dinner seminars we held. Just briefly going to go over a little bit deeper dive on one of the products that we deal with in our industry. As you can see here, I am a retirement planner. My name is Ben Moore. If you're on this call, it means we probably either met or you were introduced to us here today through a friend, and we appreciate them sending you over to us. Let's go ahead and begin. Oh, let's see here. Hold on. There we go. We obviously have some disclosures. We put this up at all of our seminars. Essentially here it states that we are not tax providers or legal services. We are just essentially giving you some information today on some ideas. I'm going to let this sit up here for, probably another 5 seconds just to make sure that we've done our due diligence to let everyone know that things here are hypothetical. We're showing you, just some ideas on investments. Okay. So the first thing we said is, what is an alternative investment? An alternative investment is where, what is it? Easily described is an alternative investment is something that is not in the market. We'll go over more on that. Why would you invest in it and how? We're just going to do the what, why, and how. and go through what this is all about. So the first thing is what is an alternative investment? We talk to people every day. They go, what is it that you are involved in? My business partners and I always tell people we deal with alternatives. The alternatives in investing, really what it is an alternative to investing in the market. So just think of something that has nothing to do with the stock market. When we invest in this country, we are always constantly worrying about, was the market up? Was the market down? This would be something that you invest in where it clearly has little to no effect on you at that exact current time if the Dow Jones went up 200 or 300 points or went down 200 or 300 points. Okay, things such like this that you hear people talking all the time about are precious metals, people buying gold, buying silver, something of that nature, oil and gas reserves, private equity. This is where you've probably, if you've been to a seminar, you might have been pitched by somebody a chance to come in and buy up part of an oil well, or something such as trying to build an oil well somewhere, or even dealing with excavation, trying to find oil somewhere, maybe in Texas or in other countries. Real estate at some point could be obviously considered an alternative. That is, if you're involved in real estate investing of some sort, could be flipping, could be dealing with commercial real estate, so forth. Cryptocurrency, which is all the rage these days, has its own variance on what goes on there, but you can see that it's not strictly tied to the market. And then what we're going to talk about today, which is the platform we deal with a lot over here, which is life settlements. Okay. So why? Obviously, one of the main reasons that you would invest in an alternative would be diversification. Most people, when they invest, are usually investing with the retirement funds, because that's the easiest way they do it. They work somewhere, they have a 401k, and that money is put into an account. And usually that account just automatically is put into the market. Most people just assume that their retirement accounts are in the market. You can actually invest in alternatives with your IRAs and 401ks. There's non-correlation. What that term means, it's a term we use in our industry all the time, is non-correlation is, again, that it has no correlation to the market, but not only that, it has no correlation to a lot of things, such as the economy, politics. If Trump won a second election, Biden, even though there are changes in regimes politically, most of the times a lot of these alternatives are unaffected by that situation. And then what we call just a separate risk profile, putting your money somewhere where, yes, there could be risk, but ultimately it's not associated with the same risks that you see, say, with your house or with your market-based accounts. If the economy goes down, some of these things won't be affected if unemployment goes up or inflation goes up. So how do you invest in an alternative? A lot of people go, what do I do? How do I do this? Obviously, the first easiest way is you can essentially invest your cash. When we say cash, we use our term in our industry. You might hear this from people where they say, I invest non-qualified funds. That is just a terminology, meaning that doesn't qualify for a tax account or a tax exemption. So it's really just where you have money in the bank, you're writing a check, and you are purchasing it. So one of the easiest ways to understand is if somebody wanted to actually buy a physical bar of gold, they can go out today and literally go buy a bar of gold by just writing a check or bringing actual physical cash in and buying that bar of gold. That is one way you can go ahead and invest in an alternative. We recommend normally, if you have a living trust, that you use your living trust to own that physical item. The reason being is that it just makes it a lot easier if you were to pass away on how you would pass it on to your heirs. We talked about this earlier. I would say about 70 to 80% of most investors I deal with invest with IRA, just because they have a surplus of funds there that are already invested in the market. They feel that some of that money needs to be diversified. So I might be in front of a husband and wife that have an IRA account with more than $500,000. They might consider taking $50,000 and putting it into an alternative. When I say this, yes, your IRA would actually purchase the item. And there's a way that we would do that for you. It would be 100% tax deferred. I would say the biggest thing that people get confused on this is that they think they're actually going to have to cash out part of their IRA and pay taxes. And that's not true. You actually are physically taking some of the money from your IRA where it is now and investing it in one of these products. Then the final thing is a Roth conversion. which I will be doing a seminar, or I will be doing a webinar soon on Roth conversions. So I'm not going to go too much into that, but essentially what you're doing here is that you're able to take a portion of your IRA and then essentially convert it to Roth so it's tax-free. What you're doing, it would be paying taxes now on it, and then moving forward, that money will be tax-free going forward. It's a great way to get your money out of the what we call the tax time bomb. That's something we could do for you as well. And the majority of my clients who do Roth conversions usually put it into an alternative space because they want to make sure that they get paid on that money. And with the market being, fluctuating, if you do a Roth conversion and the market drops, you could hurt yourself significantly on that. So the area that we're going to talk about today, the space that we're in alternatives, is what we call life settlements. As we show you here, Warren Buffett has been a big proponent of life settlements for 20, 30 years. He owns a firm that actually buys up a lot of life settlements. And then the big banks, several big banks out there also do the same thing. And as you can see here, there is a study that was done out of the London School of Economics, I believe, where they were seeing an internal rate of return of almost 13% in the industry during that time. With us and the way it works, we would say that's probably a high number. I would say that most of the clients that we deal with are seeing returns somewhere in more like a 6 to 10% return is much more likely. So let's get into what life settlements are. Life settlement essentially is where you would own a portion of a person's life insurance. Simply stated, there's somebody who's 80 years old, they don't need or want their insurance anymore. They want to sell it off. You can come in and buy it. That's what Warren Buffett does. That's not exactly what we're talking about here, because the issue is Warren Buffett, you're going to have a lot of money to back up that move. If somebody has $1 million policy, you might have to come in for $300,000 or $400,000. If they own, you own several smaller policies, it's just a lot of money to put in. And we think that that's too much money to be doing in this situation. Probably look at not having more than maybe 5 to 7% of your overall portfolio in life settlements. So what you can do is you can buy small portions of policies with other investors, and that's what we help you do. We believe this is true diversification, because the point is that you are investing in something that absolutely has nothing to do with the market. You can follow the smart money. This is what Warren Buffett has been doing. And as we mentioned earlier, yes, you can invest cash, usually using your trust, or you can use retirement funds as well. You can use IRA money. And of course, you can see here, it's great for Roth conversions as well. So there's a portfolio structure. It allows you to buy into multiple policies at a time, which is great because it provides even more diversification. Per round, there's usually 5 policies available. There's a premium reserve account that is set up that is only used by the trust company, a third-party trust, to pay the premiums for a certain period of time. So there's a timeline where you, the investor, aren't paying for the insurance cost. It's usually somewhere between a 5 and 10-year period. And then we use a third-party trust company to do all administration, which is important so that you don't have to worry about, is this a Ponzi scheme or something of that nature? It's all held through third party. And then you have third-party life expectancy reports that we would give you so you can review them and see who you're actually buying. As you don't have a name, you will know their age, their gender, everything you would ever ask. What is their maladies? What's their family history? All those kinds of things. And then finally, we're one of the few companies out there that uses what's called third-party premium optimization. That may not make any sense to you, but what that is that we go out and hire a third party to make sure that the premium amounts per year are going to be correct in the future, which is a very important thing. All of these things have been set up because prior companies that have followed this lead have made some mistakes in the past that have led to some problems. You're not using things like third-party premium optimization. Third-party premium optimization would be like if you were able to get an appraisal on a house and that appraiser could tell you this is exactly how much this house is going to be worth in 5 years or 10 years. So it's really important to have that. And we're one of the few companies that pays the extra money to get that done. So the investors have a really good chance of understanding what's on the horizon. This is the company we use. It's called Equilife. They have been here in California for a few years. This is their current portfolio, I believe, as you see up in the upper right-hand corner. And when you can tell if it's a newer round, because it says portfolio 0221, that means that it was started in February of 2021. I believe there's only about $300,000 left on this round. I believe the current offer is 88%, which means that whatever you invest, you're going to get 88% on your money on that for an estimated return. You can see that they have the policy numbers, the face amounts. When we say face amount, that means like the death benefit. So this round has $6 million worth of death benefit. You see the insurance carriers, Prudential, John Hancock, New York Life. These are all well-established insurance carriers. You can see the age and gender of each person. LE means life expectancy, how long somebody's expected to live. And you can see that each round has got a policy reserve, meaning that the premiums, the cost of the policy have been paid for a certain amount of time, and that already the third-party trust has the money in the account for over $400,000 and the estimated return. You can see here, as I said, right now's current offer is $100,000 invested, gets you 188.6 $1,000 in death benefit. I let people know with our company right now, with my company, I can take a lower commission and boost that up to actually $200,000 in death benefit. All of this is available in email form. We can also get you copies of all the medical underwriting, so you can take a look at what issues anybody would have. And as you see here, to explain to you, each policy pays out on its own merit. So let's look at policy B. I'll walk you through what that is. Policy B shows you their policy number. You could take that policy number to the third-party trust. They would verify that that is indeed the actual policy. That policy is on a 72-year-old male with 74 months of life expectancy. It's a Prudential policy.
Play little bits.
Could we Stephen, could you put your mic on mute, please? And then as you can see here, that investment per policy would be $18,000 in this policy. And if and when that person passes away, you would get $31,439.47. And each round works the same here. So we could go ahead and get these portfolios out to everybody on here if you like it. This is our information. You can see there, you can email me at benmorellc.com. That's ben@benmorellc.com. That is our 800 number, and we can get you all this information and set up a time for a private Zoom if you'd like to go over some situations, find out if this is the right product for you. At the same time, we can also talk on the phone at any time. If anybody has any questions now, you can go ahead and unmute your microphone. We'll take some questions for the next couple minutes. No? Okay. If we'll wait here for about another minute to see if anybody pops up. If not, we appreciate it. We will be back next week. Next week, I'm going to bring on a friend of mine named Jordan Trice. He is an expert in the hedge fund arena. He deals in several different types of hedge funds, and we will discuss with him. A lot of people aren't really sure what a hedge fund is. We kind of go over what it is. You have to be an accredited investor to invest in it. I'm not licensed to talk in specifics about it, and that's why we're going to bring him on, because that's what he does. That's his space. But if you are an accredited investor, that is definitely a meeting. I think you're going to, if you're wondering what an accredited investor is, you have to be worth more than $1 million. If it is something you're interested in, please come to this meeting. It's going to be a great meeting for you to be introduced to him, and he's going to explain what a hedge fund is and how the ultra wealthy use them to essentially hedge the market, hence the term hedge fund. So I want to thank everyone for joining us, and we will get that information out probably today or tomorrow for the hedge fund meeting, and we will hopefully see you next week. Thank you so much.